You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, Dale Smothers is with us now, and I'll just tell you he's the founder, CEO, and the big honcho at RD Smothers Wealth Management in Kentucky, but he services the whole country. And I will tell you what ChatGPT said about him. It said he's a seasoned retirement and income planning expert, trusted advisor, radio podcast host, published author, educator, dedicated to helping individuals retire with confidence and stability. And man, your work's cut out for you now, Dale.
I know, right? What an intro.
In the meantime, we've got the job numbers came out, and the Trump solution is, if you don't like the numbers, fire the accountant, right?
Oh, Kerry, that's funny. I love being with you, man. This is an incredible show, and love your listening audience. We have very similar, I'm sure, a very similar background in our political beliefs and our philosophical beliefs around money. But the ultimate correction that came out last Friday was one of the worst corrections we've seen, one of the most negative corrections that we've seen in half a century or more, since the 60s, I believe. We haven't been that far off with our labor reports. And so, I think Trump definitely could have tweeted something differently when he fired the chairman, but she made a major mistake. She oversaw a major mistake. It was a mistake of significant importance. And I think, Kerry, it's pretty apparent that if the Fed had seen this type of number, they would have likely at least put on the table a 25 basis point cut, and it wasn't even discussed.
Mm-hmm. So what's your take on the numbers there?
Man, the thing about these numbers is you could have any narrative you desire, maybe on one end of the spectrum or the other, let's go there, that the economy is slowing down and we're headed for recession, or you could believe, well, this is not nearly as bad as what it could be, and we're actually continuing to grow. Either of those two ends of the spectrum can be supported with these numbers, because if you look at the revision last week, it does show we are much worse than we expected to be at this time a week ago. A week ago, we thought we were in good, strong standings on Thursday and Friday. The report comes out, and it's a pretty significant change. You look at numbers this week, and it hasn't changed much from last week. And it's not like we are losing jobs. We just aren't growing as quickly. So both ends of the spectrum, you could say, hey, we're still growing and things are well, or you could say, hey, we are really slowing down here, and the labor market's showing a sign of weakness in the economy that we don't like to see. At the end of the day, Kerry, I believe that the market is still in an optimistic state of mind. I believe that investors still want to be a part of this American story. I believe that AI will continue to be the leading edge that pushes us higher in the S&P 500 throughout the rest of the year. But this pause, as healthy as it may have been, is a direct result of the uncertainty around the labor market and the economy and how the Fed will react to those numbers. One thing that sticks out to me, Kerry, not to talk over you here or not allow you to talk at all, but one thing that sticks out to me is the productivity numbers. If you look at those in the labor report, the productivity numbers show us that the workers who are still working are far more productive than they've been, far more productive than we expected them to be. And I just can't help but think that that's because of AI and all of the productivity multipliers that you receive from AI. You mentioned ChatGPT, right, as we came on. It would have taken you a few minutes to look that up, and you and I just simply put that into ChatGPT right before we came on, and it pulled every bit of that up in seconds.
That's great, and if it didn't speak so highly of you, I wouldn't have read it.
Well, I appreciate it. You do. All you got to do is type in "who is Kerry Lutz," and you see a much longer resume.
I don't know that, but so productivity. And one thing the job numbers didn't really elucidate or expand on enough is that the number of American-born people holding jobs went up, and the number of foreign-born, and I don't know whether they're illegal or legal, went down. So maybe it's not all that negative.
Exactly. At the end of the day, the labor numbers are important, but they're not so important that we make rash decisions in our portfolio. If you're an investor, or let's just say if you're a client of RDS Wealth, we are not going out based off of one labor report or another and buying or selling any individual stock or position. We're not changing your philosophy around your plan or what type of return we're seeking or what type of risk tolerance we may be taking. These numbers are really out there for important people to make important decisions, which is why it's important that these numbers are right. And in the defense of our current administration, it definitely could have been handled differently, but the result was supported by data that we made a mistake. It was a significant mistake. And whatever it is that we need to fix it, it needs to be fixed. These labor reports need to be accurate, especially in times like this where even the Fed chair himself says we are certainly high in relation to neutral. The Fed rate is higher than it probably needs to be if we wanted to be neutral in our policy, is what he's saying. So it's likely that had we have seen these numbers again, I think a 25 basis point cut would have certainly been in discussion and probably came to fruition at the last meeting. Now we have to wait till September. And Kerry, I don't necessarily think that it's going to hurt us or help us per se if we get a 25 basis point cut. But if that's all we get this year, I think the market will be a little bit disappointed. It has priced in much more than that, in my opinion.
Yeah, well, the dollar has been weak, so maybe rightfully Powell is concerned about that, right?
Yeah, that's the other side of the coin. On the other hand, Powell has every right to say we're data-driven, and the data just hasn't really supported a rate cut. Data-driven Fed, no rate cuts up to this point. Well, if you go back and look at the data, Donald Trump can complain and he can certainly want a rate cut, and he has an argument to make that it would make the paying down of the debt easier. But that's not the Fed's prerogative. That's not in the Fed's scope. And when they're looking at their two sides that they need to make sure they're maintaining, inflation and labor, well, neither of those really call for any immediate action. There's sometimes no action is a good action. And that's the stance that the Fed has taken, especially with a weaker dollar.
Yeah, rightfully so. And, we're not historically, the rates are not high now.
Yeah, you're right.
You could argue that mortgage rates maybe are 100 basis points higher than they should be. But a 5% mortgage, when I grew up, well, in the 60s, it was 2-3%. But in the 70s and 80s, it was 5, it went up to 20-something percent. But 5% over time is a normalized rate. So I don't think you can complain that Powell has effectively normalized interest rates.
You're right. And the thing is, anybody can complain about anything they want. And clearly, Donald Trump complains until he gets his way, right? Yeah, exactly.
It's America. You're supposed to complain.
You're supposed to complain. But when you look at it from the scope of history, you're right. And if you look at the labor market from the scope of history, we're not in dire need of a rate cut. The labor market's not weak at all, even with the most recent revision. It's not weak. It can get a lot worse. And, it's that old adage of if you lose your job, it's a recession. Oh, excuse me. If your neighbor loses his job, it's a recession. If you lose your job, it's a depression. That old adage holds true in many walks of life. And when it's hard for us to purchase a house that the appreciation has went through the roof, because in the 60s and 70s, and especially in the 80s, when interest rates were at 12 and 15% for purchasing a house, home values were, 3 times less than what they are now, 4 times less than what they are now. So it's all relative to an extent. And if you ask me, I think that the market as a whole has gotten spoiled. We have talked about this in past shows.
Yeah, absolutely.
The sugar high, right? They're sugar high, and the Fed at one point was handing out pixie sticks, continuing to cut rates. And at the end of the day, 2025 just hasn't given us the pixie sticks that the Fed had promised at the beginning of the year and that the market had desired. But AI and solid earnings and a new trade agreement across the globe has led the market higher in spite of the Fed's decision.
Totally. Yeah. So at some point, though, they will be cutting rates, won't they?
They will be cutting rates. It's very likely. You know, our stance here at RDS Wealth, Kerry, has been we expected, honestly, to have one by the end of summer. And again, had the labor statistics come out, I think that would have came to fruition. Now we have 3 meetings left, and I wouldn't be surprised if we see a cut at all 3 of them.
So 25, 50 basis points, they'll have to make up for what they didn't do this month, right?
Possibly. I wouldn't be shocked at that at all. A 75-point cut by the end of the year is certainly on our bingo card. 50 is almost a shoe-in our opinion. And what is it? 3? If I'm not mistaken, we have three additional meetings for the rest of the year to make it happen. So we're looking at.
Maybe we'll get a total of 100 basis points off the rates by the end of the year.
And then guess what? Donald Trump was right again. Isn't that crazy? It's wild.
Yeah.
We're living in a.
Yeah.
No, please.
Sorry.
Go ahead.
So what are you making of the deficit and the tariffs, which is bringing the deficits down dramatically, right?
Oh, sure. I mean, in a perfect world, I think Donald Trump has an incredible mission and a vision for what tariffs could be, and American people could get behind this to eliminate the need for income tax and to bring in enough tariff income. The only issue with that is that if we really want to onshore companies, then tariffs eventually could very easily go to zero. If everybody's making everything in America, again, if we're in a theoretical world, if everybody is making everything in America, then there are no tariffs, or at least no tariff income. So, at the root of this, I think that the tax code, I know we're shifting here completely, but the tax code should certainly be reviewed. Some sort of overhaul about the tax code and how we pay taxes is something that has been front and center for the last 6 to 8 months. And understanding that tariffs could theoretically, for the short term, eliminate the need for income tax. In theory, I don't think that the math would work out, but in theory, I would love to see someone step up and say, now it's finally time for us to consider a consumption tax across America. Now we have illegal immigrants spending money to buy things and paying for a national tax. Now we have billionaires spending money to buy their yachts and paying a national income tax. It's not income tax any longer. It's just a higher sales tax that goes to the nation's budget.
In effect, the tariffs are a surrogate for that when you think about it, because they're strictly consumption based. If you don't buy this stuff, you're not going to get hit with it. And the way he's structuring it, certain things we got to buy, energy, whatever, less tariff there or no tariff, and other things we got a higher tariff on. Well, it's an interesting phenomena, and appreciate you coming on, Dale. Just tell us, where do we find you? How do we connect with you?
Yeah, Kerry, anybody who is interested can tune into our podcast. It's the Retirement Matters Show with Dale Smothers. Find us there, rdswealth.com. rdswealth.com will get you to our website. Our entire team is here standing by to answer any questions or help you in your retirement. As ChatGPT said, we'll start and end with this. Retirees face a very unique set of challenges, and our objective, our goals every single day is to help navigate those complexities around the income phase of retirement planning. We have our podcast that hones in on that specifically. Everything from living happy and with a positive state of mind to how we keep the bank account from running dry in retirement years. We help you with that in every aspect. So again, the Retirement Matters Show with Dale Smothers. It's the Retirement Matters Podcast or rdswealth.com.
All right. Thanks, Dale. Pleasure.
Thank you, Kerry.
We'll talk to you again soon. Questions, comments, KL@kerrylutz.com. link to Dell's sites in the show notes of this interview on financialsurvivalnetwork.com. If you go there, we just ask you to sign up for your free newsletter. Like over 70,000 people are receiving it now. Dell, appreciate you coming on. We'll talk to you again soon.